Hello traders, you're welcome to this video. In this video, we are going to be discussing a strategy that uses three EMAs. Okay, it's a scalping strategy that uses three EMAs, and we're just going to be looking at how to effectively use these EMAs to boost your trading decisions. Okay, so basically, to master the three EMA scalping strategy, you need to understand how the three EMAs that we're going to be using, how they work together. And these three EMAs are the 9 EMA, the 20 EMA, and the 50 EMA. Okay, so now we're just going to be setting up these EMAs on our chart. So we're going to start with the 9 EMA. The 9 EMA is the fast EMA. Okay, this is the fast EMA. And then we're going to be adding the 20 EMA. This is going to be our medium EMA. We're going to be adding the 20 EMA, which is going to be the medium EMA to our chart. And then finally, we're going to be adding the 50 EMA. The 50 EMA is going to be the slow EMA. Okay, so we have the 9 EMA, which is the fast EMA. We have the 20 EMA, which is the medium EMA. And we have the 50 EMA, which is the slow EMA. Now, you have to understand that the 9 EMA responds quickly to price changes, while the 20 and 50 EMAs provide a broader trend view. Okay, so now when you want to identify the trend, you have to do that by observing how the 9 EMA moves with respect to the 20 and the 50 EMAs. So when the 9 EMA crosses above the 20 EMA and the 50 EMA, it signals an uptrend, like what happened around here. You can see the 9 EMA first of all crossed above the 20 and then crossed above the 50 around here, and we can see that the price rallied all the way up to this point. So that bullish crossover indicates a buy signal. Okay, on the other hand, when you have the 9 EMA cross below the 20 EMA and the 50 EMA, it indicates a downtrend. Okay, like we saw here, that after the bearish crossover happened, the price dipped all the way to this point. Okay, now as for entry points in an uptrend, you just have to look for price to pull back toward the 9 or the 20 EMA, and then you enter a buy when it bounces off. So for example, once this crossover has already happened, all we need to do is to watch out for a pullback, and we can see that a pullback happened around here. So after this pullback happened, we could have considered entering a buy trade, and then after entering a buy trade, we can consider setting our stop loss just right below that swing low. If you want to have a tight stop loss, you can set it right below the swing low, or you can just take it below the moving average. Yes, you can take it below the moving average, your stop loss. Then as for your take profit, it is important that you use support and resistance levels to add to confirmation. Okay, however, to exit your buy trade, you can just watch out for a bearish crossover. That haven't happened yet. That when I say bearish crossover, I mean the 9 EMA should cross below both the 20 and the 50. It has not yet happened. So had it been we had entered this buy trade, our buy position will still be open up till now. It will still be open up till now because our EMA, our 9 EMA has not yet crossed below the 50. Okay, so that's going to be an exit signal. On the other hand, for a sell trade, when you enter, you can set your stop loss right above the swing high, the immediate swing high for a tight stop loss, and then your exit signal can be when the 9 EMA crosses above both the 20 and the 50 EMAs. Okay, and you can also consider using support levels to determine your exit. Okay, so support levels can be a very good exit point because those are points of reversals, right? And then as for the buy, resistance levels are good points for exits. They are good exit points because they represent reversal points, right? They are reversal zones. So because they are reversal zones, you can use them to determine your exit. Okay, So while you can use your resistance to determine your buy exit, you can use your support to determine your sell exit. Okay, so basically that is how it works. Now, in terms of breakout trading, you can also do breakout trading. When you want to do breakout trading, you just have to watch for price to break above or below all three EMAs. You know, this one we just talked about now. This strategy we just talked about now is the EMAs crossing over, the 9 EMA crossing over the 20 and the 50, whether up for bullish or down for bearish. Then in terms of breakout, this particular aspect of this strategy just means when price breaks above or below all three EMAs to confirm a strong breakout. So for example, let's say you have a ranging market. This one is mostly for ranging markets, okay? So let's say you have a ranging market, price is going sideways. Whenever you have a sideways market, you would observe that the moving averages are moving sideways. Whenever you have a sideways market, you will notice that the moving averages are usually going sideways. You can see how the moving averages are just entangling each other and moving sideways. So whenever you have price finally break out of that sideways movement, and the price or the candlestick pops out of the moving averages, then that is a confirmation of a breakout. So if you want to trade breakouts from after a ranging market, if you want to trade breakouts, you can just watch out for price pushing away from the moving averages, like what happened around here. We can see that price moved away from the moving averages. It popped down away from the moving averages. That confirmed the sell breakout. Okay, now it's always important that you observe proper risk management when you are trading. Make sure that you do not use an amount that you can't afford to lose. Make sure that you observe proper risk to reward ratio is very important. And when you're considering risk to reward ratio, you might want to be looking at risk to reward ratio of 1 to 2 minimum. Yeah, although some traders are comfortable with using 1 to 1.5, but I think it is better if you go with 1 to 2, meaning if you are risking $1, you should be aiming to profit $2 minimum. Okay, so when you observe good risk to reward ratio, even if you end up having the same number of winning trades and losing trades, equal number, that is, let's say you win 2 trades and lose 2 trades, you're still going to be on the winning side. That's the importance of risk to reward ratio. Okay, all right, so that is it for this scalping strategy. And because it is scalping, you might want to use this EMAs on smaller time frames. Well, it still depends on your tolerance for holding trades for long, because you can scalp on 15 minutes, you can scalp on 5 minutes, you can scalp on 30 minutes. Well, I can say you might be able to scalp in 1 hour. It's just that it might be intraday trading in this case, because if you are using this strategy on the 1 hour time frame, then you are probably going to be doing intraday trading. Yes, because you might have one trade open for a couple of hours. Yeah, so in that case, it might not exactly be scalping anymore. So basically, you can actually use this strategy on any time frame, depending on your tolerance for holding trades for long. So I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on further updates. Thanks for watching. Happy trading.